Uh-huh. So can you see?
Sure.
Uh-huh. So
Yes, I
I
can.
was trying to explain a trade that I missed today. If you look, you remember I was saying that I don't know if you remember from yesterday,
Okay.
we had a plan that if the market should come down, I think the market was somewhere here. And I was saying that there's a likelihood that it will come back to the straight line and then it will shoot up. I don't know if you remember.
Yes.
Uh-huh.
Yes.
But this happened at a time
I
that
remember.
yes,
I
yes.
remember you.
Yes. But as you can see, it happened at a time that I don't place any trades, which is 11 o'clock, somewhere here. So that trade was out. So this morning when I opened the thing, this is where we were.
So
This
it's happening at
Yes, Asian session. So you see what I was talking about, that the market doesn't care whether it's Asian session or London, especially okay, actually it's gold, not the market. It's gold that doesn't care. The other ones they respect the time, the sessions.
okay.
But
Which other pairs respect the session?
oh, the usual pace now. Oh, I've deleted all of them. The forex, the currencies. Gold is a commodity. It's a metal. I don't know if you got that part.
Okay. No, I didn't quite get it.
Yeah, I'm saying that as for gold being a metal, it usually doesn't respect uh the timings, no, the time
Time zones with
sessions.
time.
Exactly, it can move at any time because it usually moves with like macroeconomic or like geopolitical news.
Yes, please.
So if let's say Trump is attacking China at any point in time, we'll see gold moving up. Or if China decides to put some
Okay.
tariffs on China on the US, we'll see gold going up. Like if there's any trade war or anything that's bad for the world economy, gold will start going up because everybody's trying to
Okay.
back their money up in gold, which is a store of value. You get me? So there's a trade I was talking about. The market made a low, and then we're expecting it to make a lower high to go lower. Do you understand? Can you hear me?
Yes, please.
Uh-huh. So here I was just waiting for the
Yes,
market
please.
to give me a reason. I knew I wanted to short. I just wanted a reason, and I wanted to know where to short from. So if you go lower onto the smaller time frame. So for this particular trade, I used the was it a 5 minutes? Okay, yeah, this one. Sorry, I missed it completely. Like I wasn't even available. I was switching someone's wound. By the time I took out my phone, the thing had already left. So this
Dog, dog.
this was a trade. So actually, so you remember you said I was saying that the markets can give you that double top pattern.
Yes, please.
So this was it, but I wasn't available. This was the first tap of the level. And you can see this bearish candle rejection. It came all the way down. You can see it. This candle.
Yes.
And then the market came back to the level again
Yes,
and then
please.
gave this engulfing again. So the moment I saw this, if the moment I would have, if I had seen this engulfing, I would have just entered myself right there, and I would have kept my stop loss above the high.
Mm,
Then I would have kept. So my take profit would have been at the minus 27 level. So you just pick your Fibonacci and then you mark it out for your minus 27 level, which I'm sure you usually see it on my status. So this does this level. So I can delete this. So usually if you look at the number, it's 44.96. That's kind of like 4,500. Okay, that's kind of like 44. Uh,
mm.
let's try and adjust it. I usually prefer to use the round numbers. So if it's 44.96, we can just make it 44.95. 44.95 is fine. Or we can make it 44.96 flat. So that's where my take profits would have been. So you can see this particular trade, I would have had a risk reward of
Okay.
2.77. You understand?
Okay.
So the moment I enter this trade and I put my stop loss and my take profit levels, I
Yes.
don't touch it again. I just let it. If it goes to my take profit, fine. If it goes to my stop loss, fine.
Mm,
Yeah.
okay.
Mm,
Yes, please.
Yeah. So usually that's how I gauge the take profit. So this afternoon, so I was looking for so I was looking for a setup here. I want because the market was making lower lows and lower highs. If you look, it made this lower low, yes, lower low here, lower high here, made a lower low here. So I was expecting a lower high level somewhere here for it to continue going down. So I was actually looking for a short around here. I mean, a
Yes,
short
please.
position. But by the time I came from the gym, I saw that the market had already blasted through here. But right now, the next question is always what is going to
Mm.
happen next? The market is it's an on like it's on some space with that's uncharted. Like it's at a place that is in the middle of nowhere. That's how I should put it. Anytime you see the market somewhere here, it's in
Yeah.
the middle of nowhere.
Yeah.
So usually what you do is that you go higher, go to the higher time frames. So this one maybe the daily will help us to have an idea.
O-
If I go up to the daily and there's no idea, I just stop and let the market develop some more. And if you look at the daily, it's so easy.
Okay.
You can see the market made a high, I mean a high, a low, made a higher high, and then it came back and broke that low, this low, making a lower low, and then made a lower high, and then came down here. So the market is so right now it hasn't made a lower high yet, but the momentum is very bearish. You can see over the last
Yes.
since
Yes,
12
please.
May, the market has given us only one, two bullish candles. The rest have been bearish, bearish, bearish days. And today gave us an indecision candle. So you can see that even the market is telling us that it doesn't know where it wants to go. That's the confusion I'm having on the lower time frame. The one at the 1 hour. You remember I told you the 1 hour, I don't know what the market wants to do here. If you just look at it, it's confusing. I don't know if the market wants to go up or down. And that's the evidence. That's what's evidenced on the daily. You can see it's a rejection candle. It looks more like it wants to go up, but this is an indecision candle, which confirms our indecision on the lower time frame. So this one we just have to stay out and then let the market decide what it wants to do, and then we can react from there. You understand?
Yeah, the line broke, so I put
You didn't get that part. Yeah, Samuel, did you get that part? Hello.
the line broke, so I couldn't hear.
Yeah, I'm saying that. Can you hear me? Hello. Hello. Can you hear me? Hello.
Hello.
Can you hear me?
I can hear you.
Uh-huh. Is it clear? Is it clear? Hello. Hello.
Uh,
Yeah, I'm saying, is it clear?
Pardon me, it's my network. My phone pass.
Your phone is the network has a problem.
The network has a problem, but now I can hear you, Doc.
Uh-huh. Yeah, so I'm saying,
Okay.
uh-huh. Right now, this market is at a place where I'm not sure what it wants to do. I don't know
Mhm.
whether it wants to continue going up from here or if whether it wants to
Mhm.
continue going down from here. I don't know. And I'm saying that it is only confirmed. It's even, I mean, we have more confirmation on this daily candle. You can see the current state of the daily candle. It's an indecision candle.
Yes,
It's about
please.
to close as an indecision candle, which just confirms our lower time frame confusion.
Yes, please.
So right now, I really don't know what this market wants to do. Because I've seen it's grabbing liquidity from this market's high, but at the same time, there was a rejection from this bottom here. There was a rejection all the way up. So it tells me that there were some bulls that stepped in, but at the same time, the bears are also preventing this market from going above this level.
Yes,
So
please.
the market is trapped. So we just have to give it some time for it to develop, for us to see exactly what it wants to do before we can take our next steps. And since tomorrow is
Okay.
Friday, we may or may not get a setup. So we are not really keen on getting a setup because it's the end of the week.
Yes, please.
Uh-huh. So what other question did you have?
Well, that was basically it.
Oh, okay.
Mm. And which levels of which time frames do you usually draw your support and resistance? Like when you're analyzing after the daily,
Uh-huh. Yes.
what you do
So for that one, this information I'm giving you is premium level information.
there. Thank you for the
But
privilege.
I've come to realize that almost all the mentors out there, they will never tell you. It's a secret. It's a
Mm,
secret thing that everybody like what's the word? They overlook. Never,
okay,
never ever draw your support and resistance on your higher time frame. Never do that.
okay,
A lot of people will not. A lot of people. So let's say, for example, if the 4H is our higher time frame, okay. When they just open their
okay,
higher time frame, the first thing you see them doing is start looking for support and resistance levels. That's very, very wrong. You see them doing this. You see them start to do this like
mm,
like this. Then you
yeah,
see them drawing trend lines. You see them drawing trend lines from there to there and like blah 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 blah. That's very wrong. The higher time frame is not for drawing support and resistance or trend lines. It's not for that.
okay,
The higher time frame is meant for determining your direction. That's all.
yeah,
If you do that, you confuse yourself. So, for example,
okay,
let me give you an example. Let me give you perfect. I want to look. I'm getting you a very 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 good example so that we can use that one for it to make sense. Uh, okay, let's use this. Let's just come back and use this. You see this by this point, even though it occurred at the wrong time.
yes, please.
Yeah, this by okay, it doesn't match the structure. I want one that will match the structure. Let's use this. So here, this market started to go bearish like this. So we're looking for this lower high, right? And then let's say we missed it, and then the market came down here and then came back here again, right? It gave us another lower high. So I mean, we would have been looking for a potential lower high again for us to go short because we didn't know if this would have been the lower high or not.
Okay,
Do you get me? So the best thing you do here, you know that you are looking for a lower high, right? And the only way the lower high can be confirmed on the lower time frame, because we are looking for bearish here, is when the support level starts to break and the resistance level starts to hold on the lower time frame, not on this time frame.
okay,
Do you understand? So let's create a
yeah,
boundary here so that we can know where we are. So we know that if the market should close above this level, okay, it's not technically if the market should close above the bodies of this, the whole setup has become invalidated. But I usually put it
hello.
at. Can you hear me?
Yeah, now I can hear you.
Yes.
I
So I'm saying
couldn't
that
hear you after the
I'm
markets
I'm
closed
say
above
I'm
it.
saying that we can look for boundaries. We can create boundaries so that we can when we go into the lower time frame, we don't get lost.
Yeah,
And the boundaries are, first of all, we want to mark our point of invalidation. If the market should go above, if the market should close above the bodies, these bodies, so if the market should keep pushing up, and on this 4H time frame, a candle closes above this level. This whole short setup becomes invalidated. That's the first thing.
okay,
So we know that we are within this range here. So we are within this high and this low. And we are waiting for the market to pull back to give us a potential lower high here for us to go short. So you already see that we have a
yes, please.
bias. We already know that we are going short, and we already know where we want to go short, and we already know what the market will do to prevent us from going short. So you see, we've already answered all those questions on the higher time frame.
Yes, please.
So we now have the setup, but it's not ready yet. Do you understand? So,
Yes,
but I
please.
was telling you that me, the way even though I understand this, but the way I market, I prefer to keep it at the wick here,
Okay.
just so that I can get the full range in my mind. So let's go down to the lower time frame, and then let me show you something. So now this is the lower time frame. So the lower time frame, the question now is, so if you look at the other people, the predictive traders, that's the ICT and then the other people, they usually do predictive stuff. So they will be marking out other blocks, this level. That would have been, so you can see the market tapped into that level.
Yes, please.
They would have been looking for, so they'll put their, this one here, their entry, and put their take profits above here. And then they will put their take profits, I mean their support level above here. And they'll put their take profit somewhere below. I don't know. But we are not predictive traders. So I mean, at least I'm not a predictive. I think you are a predictive trader.
Yes,
Uh-huh.
please.
Yeah, so I will not look at that. What I will look at is simple support and resistance. So
Okay.
so if this market should have so it bounced off of this level and then it came up. Remember, we are not shorting from this level, because if we short from this level, our stop loss has to be above here. And I don't even like the
Okay.
way this price action is looking. It looks very, very bad. That's not how a healthy price. I mean, this is actually healthy because the market is in equilibrium. When you see the market range and it's in equilibrium, there are equal number of buyers
Mm,
and sellers, and that's what everybody wants, so that the price will be stable. Well, we are
okay.
speculators. We don't want prices to be stable. We want prices to move so that we can speculate properly.
Mm,
So what the point I'm trying to make is that, so here you would have now been looking for a very, very key support level. And if you look very closely somewhere here, there's a very, 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 very key support level here, which acted as a resistance multiple. It acted as a resistance here. In fact, all of this is still the same level, but just that, I mean, to make my support level very nice, this is the level I would have marked. So it acted as a resistance here, then a very nice support, even though we had some slippage, then a very nice support, then a very nice support, then a very nice. So you can see it was holding price.
okay.
So immediately
Yeah.
you
Yes, please.
so this is where you start drawing your support and resistance levels, and you can see that we had a very, very, very strong resistance. You can see that we have a very,
Yeah.
very strong resistance level here.
Yeah.
Where
True.
Yes, where this market makes a resistance, resistance, and even a fourth resistance over here. So this is where you start marking your support and resistance, and not the higher time frame, because the higher time frame support and resistance, you are not using it for anything. But I've seen all the gurus, all the big traders, you see them marking support and resistance from the higher time is just wrong. They do that even though they don't use it, they do that just to confuse their students so that they'll keep coming back for them to keep making money. But the true nature, if you actually look at what
Okay.
is impactful, it's to draw them on the lower time frame, because that's what you need to make a decision. The higher time frames, you don't need them for any decision making at all. Yeah, you just need to get a bias, and a bias you don't need support and resistance to get a bias. You just need the range on and then the
Yeah.
momentum. That's all. So once you come to this lower time frame, you can now start
Yeah.
playing with your trend lines. You can see this trend line had multiple touches. Let me use my arrow to show you. It had one touch, two touch, three touch. So this is a very, very strong. So you can see there's a support level, there's a trend line level. So this you can see that this is a very, very strong level. If the market should show movement, then you can see this candle. Do you see the kind of candle that broke through it? It's a monster candle.
Yeah.
And you see it's a monster candle. So when you see that kind of candle, just know that the market is ready. And before that monster candle came, this candle actually came and swept almost all the stop losses above here. You can see this candle.
Yes.
So it's telling you that they are ready to turn because they swept all these candles. You had this momentum candle. They now had further ranging again. Then you had one last try over there. Then you had this momentous candle coming down here.
Mm,
And so you can see that you just have to read what the market is putting in front of you. You are not predicting anything. You are just seeing this is what the market is doing. So this is what I'll do.
okay.
We are not predicting that, oh, there's another block here. The market might stop there, might do this, might. We don't do that. We just look and we say, okay, it has done this, so it is likely this, and then we move. We go with evidence.
Okay.
So once this candle, so this we are just waiting for this candle closure. So exactly at 145, or I mean 130, 145, you would have had your entry. So once this candle closes, you can enter at any point in time. If the market even pulls back against you, let's say you entered somewhere here and the market is coming against you, it's just giving you a better price level to even add more entries. So,
Okay.
so if this market started pulling back like this, you would have just waited to see any reason to see if there's any rejection. And you can see this wick. The wick just
Mm.
rejected all the way back there. And this candle even closed bearish. So this you could have even added one more setup. And then you put your stop
Mm.
loss again at the same place. But let's just, for the sake of simplicity, let's just do one setup. So now, so we've gotten our entry here. We've gotten our stop loss level here. So now where's our take profit? So we can go back to our higher time frame, which is what we will use to help us get our take profit. And remember, I was telling you that I use Fibonacci to help me do that.
Mm.
So the Fibonacci would have now been from the major high, which is there, to the major low, which is here. And then
Okay.
my take profit level would have now been here. So you can see that's the 44,600 level.
Okay.
As simple as that. Then you pull your take profit there. That's 850 pips.
Okay.
So you can see it's simple. It's as simple as just reading what the market is trying to do. The market is just telling you that this is what I want to do. You see?